All right, good morning, everybody. 9:59 in the a.m. Happy Friday. Sophia, good to see you. Ron, Dabchain, nice to have you guys here. I'm just going to go ahead and turn on my microphones. Daniel, good to see you. Daniel, you notice everyone's trying to get ahead of you now on the good mornings? You've set the bar. We'll give it a couple minutes, guys. I'm early. I know that I am. Reminder, if you are not someone who posts charts, or somebody who just kind of has me running in the background. I am running live on YouTube. We do have a 50-person limit here in the room. I don't want you to leave the room, and I do want you to keep posting. But if you'll leave the Discord stream available for the newer demos and people in the very beginning of their education, it makes it easier for them to go back and forth. But you can always post all the charts that you want to post. I'll cover each and every one of them. We're still working through how to make everything better for everybody. Yesterday's YouTube worked out, except we couldn't post links. So we're back to Discord today, and we'll continue trying to move forward, making it better for everybody. That being said, good morning. It's nice to see you guys here. I'm excited about Friday. It's been a great week. Been a lot of movement in the market, awful lot of discussion about rules, awful lot of discussion about all the good stuff. So we're going to keep moving with the good stuff. My name is Mark Novak. Hey, good morning, Jason. I'm going to be talking to you about rules if you're brand new with me today. I'm going to encourage you and respectfully ask you, I want you to post your pictures. I want you to post your questions. I want my new users really taking the reins on this classroom and telling me what I'm going to talk about today. Tell me what you need help with. Tell me what you're working on. And let's focus on that. Let's do a lot of chart reading. We'll see what we can do. Good morning. Good morning. Nice to see you, Joel. Before I do anything, guys, I go to forexfactory.com. This is really part of my morning routine. When I am setting up my computer for high performance, when I am letting charts open, I'm coming over to forexfactory.com and I'm just making sure that there's not something going on that's going to make the market move a little crazy. And I'm looking for these high impact news, these red boxes. Core PCE price index. Guys, I have absolutely no idea what that means. I don't know what they're talking about. And honestly, I don't really. Hey, Jose, good to see you. I'm not really concerned about what the news is. The thing that I'm concerned with is that it's high impact. And what I know is that that has the potential to make the market move erratically. So I'm coming through, I'm looking for high impacts. At 10 a.m., we're going to have the pending home sales. That's a medium impact. Once again, it has the potential to move that market a little kooky, a little crazy. It can take me out of a position, slip, all that stuff that we don't want to have happen. So just keeping an eye open, writing a note on a piece of paper, set a timer on your phone if you need to. But make sure that you know where news is coming in so that you can stay out of the way. And then everything that I talk about, guys, comes from two spots, and I'm going to do it like this today. Everybody's familiar with the Discord room, right? You've gotten in, you've seen it, you've been there. Your educational outline is really anything and everything that you can need. There is self-training. This will A to Z take you through the path to get you where you want to be. When you're looking at it in the off hours, class isn't going, maybe the weekend. There's user guides, the same ones that we're going to look at on the web page, tutorial section, software user guide. There's a section for trading rules, a couple sections for chart reading, recognizing the patterns. There are example trades. And these example trades are pretty amazing. These are put together. Cameron's nice enough to add them in. These are from the Nexgen users. You're going to see these on NinjaTrader 7, NinjaTrader 8, you're going to see chart configurations that don't look like yours, because this is really every Nexgen user and owner is posting here in the traders chat. And you can see just a little different, right? This is a Nexgen. They've got bars, MACDs. It looks different than what we teach in the class, but this is an owner, and he's taken the software and he's making it his. You'll do the exact same thing. And then there's the education room where we are. And of course, if you need any help at all, guys, there's the tech section right here. You can put in a ticket with Jason, and he'll get you all squared away. So there's your Discord, anything and everything that you could possibly need. And now we have the Nexgen education, and it's the exact same information, just a different place to find it. Software user guide. This is your NinjaTrader how-to. Opening, closing, scaling charts, setting in tops or stops, targets, changing the look of your NinjaTrader. You can even do that. There's a lot of how-tos here. For the sake of new users, the most important software user guide page is going to be this screen capture, how to share in class. When you downloaded the software, you got your demo. Capture software was put on. You can see that Capture and Snagit, they come from the same place, and they are virtually the same tools, but Snagit has more bells and whistles. Capture software, I'm going to put a little chart reading in on this too. I can hover over one chart, and it'll give me one chart, but if I click and drag from the top left to the bottom right, I can get my timestamps, my prices, both charts. When I release, all I have to do is click on this camera, and then here's my image. And guys, I want to give a little lesson on this one too. Nexgen uses Fibonacci, obviously, and we use a set of indicators and a set of rules that gives you an advantage every time you take a trade. This is an amazing picture. I want you to see that Fibonacci resistance held and pushed all the way to support. And you can identify when that market is caught in a range through using the termination conditions that we're going to teach. When you take a picture, you can use these arrows to show things. You can use these boxes. But the most important tool that you're going to use is use the call out and talk to me about why you did what you did. Because what happens is when you tell me why you're getting into a trade, when you tell me why you're getting out of a trade, you and I are going to have a conversation in the classroom. You're going to type, I'm going to talk, but you're going to get feedback on every chart that you present. You're going to get feedback on every thought that you share. And what the ultimate goal is to be able to take what you're doing, refine it, make it better, and get you on the path to being to where you want to be. Once you've marked up your charts, you can click this upload button and it'll provide you a screencast link. And this means that your picture is now in the cloud. And once I click copy, I'm just going to slide over to this education room. Control V, if you're using the pop out, will put it in there. And now my picture's in the room, and it's just waiting for that break in the action so that you can get some feedback, so that you can get the information that you need based off of this. You can also, if you want, just click copy right here. It'll put that picture right onto your clipboard, and then you can paste that picture in the room just like that. It'll show up without the screencast link. Either one's okay. I can see both of them. Do whichever one you prefer to do. It's no problem at all. But that's right there in the software user guide. And if you need help with taking pictures, if you need help with taking those pictures and putting them into this spreadsheet, I'm going to show you real quick. If I paste my screencast address right into the spreadsheet, that's the wrong one. I just posted an entire picture. Dad, get the cat off the keyboard. If I post my screencast address right into my spreadsheet, guys, I can save this and go back and study these over and over. And what I can also do is hit my Insert tab and click this link button. and it's going to allow me to take that same web address, that screencast address, and label it as a winner, as a loser, as rules followed. Once I click OK, I have this link, and from the link in my spreadsheet, I can go through and I can study each and every day. And we're going to talk about when that spreadsheet's going to be used and how to use it, but that's how you're going to get pictures in it. And then the tutorial section, guys. This is your foundational approach to learning the software. Everything that I talk about is going to come from this educational section, from this tutorial section. And I'm going to introduce you first to what you're going to be focusing on for the first 30 days. Going after those highest probability trend trades, going after a trade where every indicator on every chart agrees with the trade, is what we're going to talk about for the first 30 minutes, getting those high probability trend trade rules in place. Because when you focus on the high probability trend trade, just for 30 days, guys, I'm not going to tie your hands and say this is the only trade you'll ever take. But if this is the first trade that you take, if this is the study that you really focus on for 30 days, you're going to learn to read your charts. And chart reading is 90% of what we do. 10% of what we do is taking the advantages that that reading gives us and turning it into a trade. And chart reading mastery is going to incorporate 3 essential elements, and these are the 3 essential elements that you're going to be able to pull off almost instantly looking at your charts. You're going to be able to identify where the market is likely to continue and use that continuation point for entry on a high probability trend trade. You're going to understand where the market is likely to go and use that for profit targets. And then you'll also be able to understand where the market is likely to stop. And this is where trends have the potential to end. And these are also anchor points that set us up for going the other direction, for setting up that high probability trend trade. So it's really going to be chart reading, not so much trading. Reading the charts, getting the advantages. When the advantages are present, then we're looking for those rules to be met, for that trade to be entered. And there's only 3 rules for that high probability trend trade. And we're going to talk about where those 3 rules come into place. Only 2 charts. Simplicity is your friend in the beginning. The less moving parts that you have as a brand new user, the easier it is to focus on the advantages that you're getting, the easier it is to focus on just really the best of the best. And we're always going to start our analysis on a 13-2 chart. It's a broad stroke of a brush. It's giving you an overall look of what the market is doing, and you only need 1 bar to really determine what's happening. On this current bar, you'll be able to understand the trend of the market through using the background color. If the background is green on the 13-2, you're only looking for rules to be met for high probability trend trades long because we're in an uptrend. If it's red, we're in a downtrend, only looking for rules to be met for high probability trend trades short. Simple advantage of keeping yourself in the direction of the overall trend. And then rules 1 and 2 of 3 will be met on the 13-2 before you ever go to that smaller, faster chart. We're going to look for strong triggers. We're going to make sure there's no areas where the market is likely to stop. And when the rules are met on the 13-2, your second chart, your smaller chart, your faster chart, this is the one where we're going to refine the entry. You're going to refine that broad stroke of a brush, and you really will be able to pinpoint with accuracy where the market is likely to continue, so much so that your rule number 3 on the 5-1 has you using a limit order, meaning that you're going to wait for the market to come back to you. You're going to buy or sell at an area inside of favorable large triggers because you've been able to identify that area where the market is likely to continue. And by doing so, you're going to be able to reduce risk. You're going to be able to maximize your profit potential. And what you're going to find is that these 2 charts and focusing on 3 rules is going to really going to hyper focus your ability to read your indicators. I've written out these 3 rules, but more than that, I've written out the advantages that they give you, because one of the things that when you're a rules-based trader, your rules have to provide a statistical advantage. They have to be back-tested, forward-tested. They have to be, hey, Michael, nice to see you. Welcome to the classroom. You have to do the study so that you can develop the trust, and your rules should provide an advantage. They should be a set of rules that win more than they lose. They should be a set of rules that are repeatable, that foster consistency, and that's exactly what the high probability trend trade is. Three simple rules: strong triggers, no termination conditions, and then entering at that area where the market is likely to continue. And the three rules provide three very distinct advantages. The advantage of momentum, the advantage of a clear path, and the advantage of an entry where the market is likely to continue. So when I'm looking at the market, when I'm talking about my rules, not only am I focusing on the advantages that the rules provide, but I'm also being aware of the advantage that I'm forfeiting when I break my rules. So give me 30 days, new users. Give me 30 days. You guys that are coming back and really getting into the swing of things again. Maybe you tried to do it your way for a while. It didn't work out so well and you're refocusing. We're going to do that with the high probability trend trade. And we're going to go through these rules and what they mean to us. And rule number 1 says that I must have strong triggers. Strong triggers are very easy to identify in an uptrend when your background is green. Those small trigger lines will break above the large trigger lines, and they will accelerate. That space created between the small and the large lets me know that the odds are favorable for the market to continue up. And guys, this is your best of the best look for a long trade. In that red background, the downtrend, small trigger lines accelerate below, away from the large triggers. Those large triggers are getting wide and angled in the direction of the trend, and it's that space created between the two that let me know that the odds are favorable for the market to continue down. So I want you to associate this strong trigger look with odds favorable momentum, because when the small triggers work their way inside of the large triggers, we call this a weakening. And that weakening of the large triggers means that anything can happen up or down. So it's a pretty simple look, and it's not a look that happens from the beginning of a move all the way to the ending of the move. We'll recognize the acceleration until it returns, and these circles actually represent, on these tails or these wicks, these are potential entries on that smaller, faster chart, and you'll notice that the circles take place during odds favorable momentum. You see it to the upside, and you'll also see it to the downside. So as we study, as you begin to develop trust in the methodology, as you begin to look for the best of the best looks, you're going to start looking for these tails on your 13.2 through historical study and recognize them as areas where trades may have happened. And then when you have odds favorable momentum, going to make sure that we're not trading into an area that may reverse the market. Rule number 2 says no termination conditions should be present. And a termination condition is that Fibonacci-based indicator. Dab chain, that is a cute puppy. It's a Fibonacci-based indicator that may reverse the market, and it's based on a comparison of the area versus those same trigger lines that establish momentum. The areas can be blue Fibonacci support, red Fibonacci resistance, yellow 1-to-1 dots. Areas can be a cyan divergence low line or a magenta divergence high line. It can be a large chart mid-band if the large triggers are a full bar away. And then we have one other one that you're not going to look for on the 13.2. This third divergence in the same area, you're going to be able to recognize these 3 slowdowns on a smaller, faster chart to help you identify change on the larger chart. And we're going to talk about each and every one of these, but first I want to just go over how do you identify a termination condition. It's a 2-part process. The first one is price reaches an area, and that simply means that these price bars have come down and they've hit that support. They've gotten within a tick of that support. It can be support, resistance, 1-to-1s, anything. But when price reaches that area of support, you're just going to ask yourself, where are the triggers? Where are my T3 trigger lines? Well, when support is reached, All of the trigger lines remain above that area of support. Therefore, this area of support is considered a termination condition. It may reverse the market. And even if the market doesn't reverse, very often there will be a sizable bounce that could take you right out of a trend trade. So when price reaches an area, the trigger lines don't break, we've reached a termination condition, no more short trades. You also see it up top here. It's kind of behind the words. Price has reached support. None of the trigger lines have broken through. So once again, a termination condition. And rule number 2 says let an area break, right? Let an area break before continuing to trade in the established direction. An area is broken when both the small and the large triggers get to the other side of the area that had the potential to reverse. So at this support, when both the small and the large trigger lines break through support, you can see that support begins to act as resistance. We consider the area broken, and once again we have that clear path to get us to the next area. Obviously, areas break, right? If they didn't, the market would just rattle like an old Pong game in between two lines. We can identify an area's potential to break by a couple things. The first thing is that the small triggers get through the area. As price comes down and exceeds, the small triggers break through as well. If those small triggers have odds favorable momentum with the large, big gap, separation, acceleration, the smaller through and the large remain above, this area has the potential to break, but it's not broken yet. This is not a high probability scenario, but this is a medium probability scenario, meaning that there's a small issue, an area has the potential to break but hasn't fully broken, and if we see an opportunity, we'll let it be the absolute best of the best opportunity, and you'll see it when we're talking about entries. But we have an area that hasn't broken, no more trades, an area that has broken, trade away, and an area with the potential to break. Make sure that you're not fighting anything. Make sure that your chart reading is putting you in a good spot, and we're going to talk about exactly how to do that. Guys, do me a favor. I know that I'm going a little quick. I don't want to lose anybody. Give me a Y in the room if you're with me. In order to identify a termination condition, price reaches an area. If the trigger lines have not broken through the area, that area is a termination condition. If the small have broken through but the large have not, this area has the potential to break. And then when both trigger lines exceed that area, we consider that area to be broken. Guys, that advantage of a clear path is a huge advantage in everything that we do. The other way we use this termination condition is you'll notice that price reaches 1-to-1s and absolutely none of my trigger lines are able to break. My large triggers go from red to green, meaning that I've gotten a reversal. Smalls are above the large, and this termination condition sets up one of those high probability trend trades, gives me odds favorable momentum with nothing in the way, and there's one of those circles on the tail. Guys, this is your absolute best of the best. And if you go back to that first 30 days, that consistent winning trades, it tells you focusing on the 5-1 trend trades that happen after a termination condition on the 13-2 chart is your highest chance of success. So we're going to focus not only on when we shouldn't be trading directly into an area, but also when we've got that distinct advantage because the area has held and provided a full reversal. We call those termination conditions that create a reversal strong tops and strong bottoms, and it's just fuel to the fire going towards your success. And then finally, we're going to have one more termination condition, guys. If you look at this picture, the market breaks through support. All of my trigger lines have gone through. My trigger lines begin to weaken and the market changes direction. We're going to be able to identify this change from a bottom and also this change, even with odds favorable momentum. We're going to be able to identify this on a smaller, faster chart to keep us from trying to continue in a direction that isn't really likely to continue. And that's going to be 3 divergence, 3 losses of momentum on your 5-1 chart, really on any chart, but you'll see it first on the 5-1. may terminate the trend. A divergence is true when a negative number prints and when this divergent cyan line prints from a low or a magenta line prints from a high. 3 losses of momentum in the same location may terminate a trend. And then to make that a bit more powerful, when your small triggers go from odds favorable to anything can happen at that third divergence, it's even more powerful. And if that third divergence is higher than the previous pivot from a low or lower than the previous pivot from a high, then we definitely have an opportunity for that market to reverse even for a moment or maybe to the next area. So if you look at this divergence from a low, 3 from a high, times like this on your 13.2, you're going to see that on the 5.1 to keep you from looking for that continuation. It's also going to become a great management tool. As your plan grows, as you begin to work on the management a little more, if you take a trade on one of those pullbacks and you're in a short position and you're excited to get to the next area, these 3 divergences will give you an idea that it may be time to manage out. If you're in a long position, these multiple divergences, these 3 divergences give you the opportunity to manage out of a trade without a loss or a smaller loss, or maybe to take profits before things change direction. So 3 divergence in the same location becomes very powerful. When you see it on a higher time frame, you can expect larger moves the other direction. So rule number 1, let's go back and recap real quick. Rule number 1, giving us the advantage of momentum, those strong trigger lines. Rule number 2, giving the advantage of a clear path. And when those rules are met, guys, you are going to pinpoint with amazing accuracy where the market is likely to continue. And you're going to look for that entry on a 5.1 chart. We're going to refine the broad stroke. So with the rules met on the 13.2, your 5.1 chart should be absolutely railing in the direction of the trend. Here we're in an uptrend. I have nothing but up bars. My large triggers are strong. They're focused towards the top. And I'm just going to focus my attention on the large triggers and the areas that may fall within them. And the areas that we trade from for a high probability trend trade can be Fibonacci support or resistance, 1-to-1s, or mid-bands. We're not entering a trade yet. We have the advantage of the momentum. We have the advantage of nothing in the way. But our rules say that we are going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers, which means that we need a pullback. And a pullback, and it's defined in the glossary of terms, is simply a small retracement in price that's counter to the underlying trend. The underlying trend is up, so we want a small retracement on the smaller, faster chart. And what happens in these bars on the 5.1, there's really just one bar on the 13.2. We're whittling it down and really focusing. When this reversal bar prints, you're going to create a window of opportunity. And that window of opportunity for long trades is going to go from your highest point of support inside of favorable large triggers to your lowest point of support inside of those large triggers. This window becomes the area where the market is likely to continue. And because of the momentum and nothing in the way on the 13.2, I'm going to right click just above that window, a tick or two. And I'm going to activate a limit order, meaning that I'm going to let the market come to me. I'm not going to chase that market. So at 79.21, I'm waiting for the market to retrace. And if it does, I'm in a long trade at 79.21. I have the advantage of momentum. I have the advantage of no termination conditions. And now I have the advantage of an entry at the area where the market is likely to continue. Because it's a window of opportunity from the lowest point of support to the highest point of support inside of those favorable large triggers, my initial stop will go below that window, down where the market shouldn't go. Because if the market comes all the way down here outside of that most likely spot for continuation, I no longer want to be in the trade. I will take this trade with these advantages 1,000 out of 1,000 times. I'm obligated because this is my trading plan. This is my focus. And 70 to 80% of the time, this is going to be my result typically. I wait for the retracement, and I'm able to enter right here where the market is likely to continue. My initial stop goes below that window because the market may push a little. It may bounce right off the top. It may not even make it. But this is my best entry. And once it moves in the direction of the trade, I'm going to reduce my risk below that pivot. Because I waited for the areas inside of favorable large triggers, my risk is reduced and my profit potential has been increased. And this is the final piece of the puzzle for that high probability trend trade. Always starting with that odds favorable momentum. See the circles with the odds favorable, making sure that there's nothing in the way, and then being patient and waiting for that pullback to the area inside of favorable large triggers. We talked about the tail. The tail on the 13.2 is an after-the-fact study tool, and I'm going to show you the picture. When the rules are met on the 13.2, guys, odds favorable, small's above the large are wide, and they're angled in the direction of the trend. I know without a doubt that this market is likely to continue. I compound that advantage with the advantage of a clear path, making sure that there's absolutely nothing in my way. And if I'm going back and I'm studying these trades historically, I'm circling that tail that I see on the 13.2. I have no idea from a 13.2 chart where this tail is going to end. But if that circle lines up, I can identify the most likely spot with those areas of support inside of favorable large triggers. So give me a Y in the room, please. I ask for these Ys every now and then. It lets me know that you're keeping up. When the advantages are met on the 13.2, we look for entry on the 5.1. And it's this pullback that helps us reduce risk. It's this pullback that allows us to maximize the profit potential. When we talk about the picture-perfect entry on a 5.1, no divergence, no slowdowns on that 5.1. Your small triggers are well outside of the large. It's mimicking that odds favorable momentum and that tight little window of opportunity, those areas of support or resistance right inside of favorable large triggers. Guys, this is your picture. This is the best of the best. And I'm going to give you this picture in Classroom because we're going to do this drill today as well. We're going to go back and we're going to open up the live market real quick. Guys, your S&P has consolidated 100%. Thanks to Fibonacci, we can see the range and stay out of this mess, right? I have a termination condition 1, 2, 3, 4 times. You guys knew about this termination condition when you opened up your software at 4 in the morning or whenever you opened it up. I have my termination condition right here in the form of a magenta divergence high. None of my trigger lines have broken through that area. None of my trigger lines have broken through this area. Guys, give me a Y in the room. You've just identified where the market has consolidated. And a lot of people get chewed up in these areas, don't they? I'm going to try to go long. I'm going to try to go short. I'm going to try and beat the system and be the first guy in. We don't have to do it as Nexgen users. We can let an area break. We can wait for odds favorable momentum. Absolutely, Rob. And do you see how we've identified it with termination conditions? And rule number 2 keeps us in a position where we never have a rules-based trade, which means that you didn't get chopped up in these areas. So if we scroll back, let's look and see if we can find, well, that's pretty much all that S&P has done today. So I'll scroll back to the previous day. Maybe we'll check out crude real quick. We're a little range bound, guys. So I can say without hesitation, in order for me to take a trade, I want this range broken. Until then, I'm going to sit on my hands. I'm going to wait for advantages. Here on crude oil, smalls have smashed through the area. We haven't quite reached support. Odds favorable momentum. Look where the circle on this tail lines up. at my area on the 5-1. Give me a Y in the room if you see it, guys. This is your trend trade. This is an area, whoo, that's a big arrow. This is an area with the potential to break because of the momentum, right? Look at that, odds favorable. The market's likely to continue. I've gotten close to this area of support, but remember that we're trading pullbacks, which means from this area of resistance inside of favorable large triggers, I have more than enough room to capture profits on the way down. As this is going to be our focus each and every day for the first 30 days, I've provided you a checklist where you can come through. Are we coming from a termination condition? Do we have all the rules met? It was, Jose. It was a 50-50 trade, meaning that the smalls are broken, the large have not. Divergence did print. Some people will have a plan that says they'll take it. Some people have a plan that says they won't because of an area's potential to break. Without divergence, it definitely goes up. I'm really more, Jose, focusing on the entry here, being able to identify the tail and the pullback. But the point Jose is making, and I agree with him, is when an area has the potential to break but hasn't broken, this divergence means that the market is slowing down. And this is where your chart reading is going to let you determine the advantages and whether or not this is a trade that you're willing to take. For me, I'm coming from an area, I've got a full reversal, every trigger's down, I have odds favorable on both, and my window of opportunity is literally one line wide. As a new user, this divergence will probably keep you out of this trade. As an experienced user, when you grow with the software, when you learn to read your charts to establish those advantages, you'll be able to see this and say, you know what, I've got so much in favor of the trade that I'll take a shot and I'll manage assertively. If it turns around, if it blinks, if it gives me a second divergence, I'll exit that trade and wait for a clear path. Does that make sense, guys? Two types of trades that we focus on. The first type of trade is going to be that high probability trend trade. Let me find it and let's define it. Each indicator on every chart is going to line up for the trade, typically when the triggers are the strongest, nothing in the way, no trouble spots between your entry and a target. When you learn to read the software, when you learn to read your indicators in that first 30 days, it opens the possibilities. And this medium probability trade comes in. The medium probability trade is when there may be a small issue. It may be a divergence. It may be an area with the potential to break but hasn't broken. And when you're executing medium probability trades, you'll take these trades and manage them assertively, meaning that your chart reading, looking for those divergences, looking at trigger line location, is going to help give you an advantage in managing these trades, taking quick profits, getting to a zero loss level. So when we look at this picture, my small issue on this one with all this momentum coming off the top is this divergence. I have to make the decision through writing a plan whether or not I'm willing to take this trade, whether or not this is a trade that fits my risk tolerances. And as you see in the room, there's a lot of people who are very comfortable with this much strength to the downside and such a small window. We'll come back and look at your pictures in a minute. But let's scroll through on crude a little bit. And here we have a very similar setup, and I'm going to look and see what that pullback looks like when it's 100% clear. It's right to a mid-band. This is more of a momentum style trade, not a high probability. And then we get into that 50-50 trade again. Let's find a clear path, guys. Strong triggers working through the areas. We'll see if we can get a divergence-free opportunity. And there it is right there. And this is what Jose was talking about. When the small break through with strength, everything says up. This is going to be your best of the best look. on one of those areas have the potential to break. So Jose, you with me on this one? You'll notice that there's no divergence. Yeah, I'm with you, Jose, 100%. But I think it's important to show both sides of the coin. Same trigger look, right? Same potential for areas to break. No divergence, strong triggers, small window of opportunity. This is the perfect look for a 50-50, meaning smalls through, large not, odds favorable momentum. For new users, as you learn to trade the software, as you learn to read your indicators, this is going to be your best look on that 50-50, because this is the look that gives you the highest chance of success, and that highest chance of success is going to breed a little bit of confidence. And then John's also put in from the management section, when to ignore divergence. This is a strong trending market. Everything says down. On this one, you can see that both the small and the large have already broken through those areas of resistance. We have a clear path. So this divergence with those strong triggers is a 100% non-issue. We don't worry about it. When that path isn't quite as clear, when you're trading at an area with the potential to break but hasn't necessarily broken, that lack of divergence proves to be advantageous. And then when you have a market and you grow with the software, you're going to be able to gauge through chart reading the advantages and decide whether or not this divergence is enough to keep you out of a look like this. So everything that we do is a progression. Everything that we do starts with chart reading, right? Everything that we do is going to start with this high probability trade, really focusing on our ability to read charts. And then you're going to be able to incorporate medium probability trades because of your chart reading, putting you in the best position to understand what it is that you're doing. And everything is going to revolve around you knowing what it is that you're looking for, you understanding what it's going to take to get you into the market. Guys, I'm going to put this in the room in just a second. It's also available in the Discord room. This is an example of how to write a very simple plan as a brand new user, as a demo user, as someone that needs that checklist to really keep you focused on the best of the best. Use possessive language. Own this trade. Make it your trade. Don't look for the next-gen high probability trend trade. You know, as you come through, look for the Buck Blue high probability trend trade. Look for the Rob A high probability trend trade. Look for the Michael Gonzalez high probability trend trade. Make it yours. And in order to enter the trade, I must have the conditions of this checklist met. And guys, this is simply, how do I find my best of the best entries? How do I get that area of support or resistance inside of favorable large triggers? Well, it's pretty simple. Is the market coming from a good top or bottom, a termination condition that creates a full reversal? If the answer is yes, this is my highest chance of success. If the answer is no, it's okay. It increases the likelihood, but it's not mandatory for a great trade. Do I have odds favorable momentum? Do I have the advantage of momentum? Do I have the advantage of a clear path? And do I have the advantage of an area inside of favorable large triggers for entry? If you can answer yes to each and every one of these questions, guys, you're going to win more than you lose in all probability. I've had this tested by quite a few people over the course of historical 400 trades. I've had it tested live trading over the course of weeks and months. And the typical win rate on this one, most people show me low 90s. It's when we deviate from the plan that it changes. This is just your perfect entry. Take pictures of your perfect entry. From right here up is your high probability, first 30 days, learn to read your indicators plan. As you learn to read them, we're going to start incorporating medium probability, because skipping medium probability trades doesn't necessarily increase your chances of consistency. What it does is it reduces your ability to make money by missing opportunities where all those advantages are still present. So on those 50-50 trades, when the small chart or the small triggers are through and the large are not, as a brand new user, maybe you say no divergence on that 5-1. Say that your small triggers are outside, that you have odds favorable momentum on that 5-1. You've taken your plan for the perfect entry and now you've amended it to include a medium probability. And once again, you're taking pictures of that perfect entry. Guys, this is your plan. If you move into edge trades, you add another page to your plan. If you move into momentum style trades, you're going to start this process over. Gary just shared a picture of his. Gary's written a checklist. Each and every trade that Gary takes has to meet a checklist. He has one for a high probability trend trade. Gary has one for a momentum style trade, for an HVA trade. And this is how Gary holds himself accountable. And even more so, this is how Gary helps me hold him accountable to his rules as he comes into a trade. He identifies it as a 50-50 trade. Divergence on the chart, pull back to the mid band inside of favorable large triggers. And Gary's plan says right now, he's going to use this chart, this market flow chart, looking for a signal to confirm his entry. This isn't a trade. You'll notice that he didn't trade, but he still took the time to go through to annotate the chart, what he sees. He puts his rules on the chart to hold himself accountable, and he puts himself in a position where there's only two options when he's reading the market. Either his rules are met or his rules are not met. And guys, that's the hard part, right? Establishing the rules, I'm going to give you the rules. You're going to practice them. Odds favorable momentum, Paul. Sorry, I got lazy. That acronym's not nearly as good as the one John coined, the WOO, the window of opportunity. But you'll be able to come through and police yourself with a checklist every time. When you write a plan, you'll be able to know whether or not you're following that plan every time you take a trade. And then here we come into one of those situations. This is very much like the picture that John just put in. Smalls are still outside but working in, smashing through the areas. Everything says down, pulling right back to resistance that, based on our rule number 2, is likely to stop the market to the upside. Everything lines up. Fantastic opportunity for entry and short trades. I imagine we're going to see an awful lot of users showing us this picture. And then look what happens down here, guys. Anything can happen, triggers. There's a loss of momentum on my 13.2, meaning that I no longer have the advantage of momentum. And if I look at my 5-1 chart, my small triggers are inside. This is not my best of the best look. And the market pushes right beyond that area of resistance inside of favorable large triggers. So it's nice when crude oil gives us lessons. Everything says down with momentum. The market continues down. The momentum is beginning to close, but I have a clear path. The momentum is lost, and the market pushes up. This is a wonderful example of your best of the best. You're still really good, and anything can happen. And as you come through, if you take these pictures, whether there's a trade or not, here's your best momentum. Here it's weakening but good. And here it's gone. Advantage, advantage but watching. Lost the advantage. And when that advantage is gone, look what the market does. This is why we focus on that first 30 days, that best of the best, because your ability to identify these advantages is going to get you in a position where you enter this trade and you take profits to the next key area, and you omit this trade because the advantages are lost and you don't give any of those profits back. Once again, guys, I'm going to do a lot of sharing today. Do they meet my rules? So, Paul, everybody has a different plan, right? If I'm following, and guys, I don't like to talk about what I trade. I want to talk about the conservative approach for new users. But let's assume, for the sake of what we're talking about, this is my trading plan 100%, guys. This is what I trade every time I open up my charts, what I'm looking at. My rules say that on a 50-50 trade, no divergence should be present. So if I'm looking at this trade, my large triggers have not broken through these 1-to-1s, and divergence is printed. So if I'm going to stick to exactly what my rules say, that's not a trade for me. And because it's not a trade for me, I can't be concerned with what happens next. Does that make sense? And it's good for new users to copy the trend trade work out of these checklists. Use the checklist when you trade, absolutely, because it keeps you accountable. Learning the rules is only half of it. Waiting for the perfect setup is the hard part. So most people start to take less than perfect trades because it keeps them busy. And you don't have to be busy to make money day trading, guys. If this trade happens twice a day and you capture $300, you only catch a portion of it, and you're consistently hitting $600 days with the best of the best trades, guys, that's a $3,000 week. That's a $12,000 month, right? $144,000 year. What happens when you're doing that on a 10 lot, when you're doing that on a 100 lot? Those same perfect trades, expanding and compounding, and letting your profits off that small, manageable goal become larger profits. It's not more trades, it's better trades. And then as we come through on the ES, once again we see smalls above the large, larger wide, angling through. Guys, we identified the range that needed to break, right? We wanted to get through that area. We wanted to get moving. Now we have odds favorable. It is a 50-50, but notice that there's no divergence. The smalls are outside. Guys, if you caught this breakout from consolidation, your target was at 77 and your entry was at 69.50. Is anyone going to show me that picture? Man, I hope so. That's a good one, isn't it? All triggers agree. All charts agree. No divergence, strong triggers, tiny window of opportunity. Guys, give me a Y in the room. The market is absolutely putting on a display for us today, isn't it? Can we put a checklist on this one? Is the market coming from a good top or bottom? It's coming right from that termination condition that gave me a full reversal, that gave me odds favorable momentum. I can answer yes. Do I have odds favorable momentum? Smalls above the large are wide, they're angled in the direction of the trend. Absolutely. When we talk about termination conditions, guys, I can call this one the 50-50, right? So if I'm a brand new user, I want a perfect entry on my 5-1. No divergence, smalls outside of the large, tiny little window of opportunity. Guys, this is a 100% checklist. This is the most conservative approach to taking a trade that you can on a medium probability. And look at how far that market went. Pretty amazing, isn't it? And this is what we're going to study each and every day, guys. Those of you that are brand new, those of you that are coming back looking for consistency, this is going to be our focus for the next 30 days, because that next 30 days is going to teach you to read your indicators. I'm going to work with you every day about identifying the best of the best, about looking for advantages, identifying disadvantages, and working together through participation, through pictures, through questions, to getting you exactly where you said you wanted to be when you started this demo. As a professional day trader, somebody that has the independence to work from home, to make money without going to a job, answering to anybody other than your checklist, right? That's the goal. Guys, there is medium impact news in about 6 minutes, which means that the market may move a little erratically. The market may spike. It may jump. I'm going to take just a minute. I'm going to go refill my water real quick. You guys can watch the market while we do it. And then I'm going to come back and we're going to start looking at your charts. We're going to continually read the indicators. We're going to look for the advantages. Um, and we'll talk about what we see as we see it, right? I'll be back in just a few minutes, guys. If you take a break, post a picture. If you have a question, post it in the room. We'll be right back. Remember, news in 5 minutes. Be aware. Back in a few, guys. a message and he says, hey Mark, I think your fibs are off a little bit. I think you're looking at a chart, maybe things don't line up. So guys, we're going to do something together, especially going into the weekend. I want you guys to see this. I want you to bear with me, and then we'll come right back and get to work. But it's going to start with, we're going to close down NinjaTrader real quick. I'm going to close my workspaces. Everybody's comfortable opening workspaces, closing workspaces. I have to open up the untitled because Ninja won't close without at least one open. So what I'm going to do is, guys, we're going to do a quick little tech run through, and I think that this is a great education for everybody. I'm going to close down NinjaTrader, and what I'm going to be doing here from the software user guide, guys, this is a great habit to get into every weekend. Deleting old charts, templates, workspaces, and starting fresh. And here's the link on exactly what I'm about to be doing here. I'm going to pull up my File Explorer. And this is if you get stuck, if something's not right, if things don't feel like it's working out. I'm going to go to NinjaTrader 7. I'm going to go to Templates and Chart. And guys, I'm just going to get rid of everything. I'm going to lose these. And we're going to get back and we're going to start fresh. So then I'm going to go back to NinjaTrader 7. And I'm going to go to my workspaces. And I'm going to do the same thing again. I'm just going to highlight it. I'm going to get rid of it. So now I've gotten rid of my workspaces. I've gotten rid of my templates. If I open NinjaTrader now, NinjaTrader's not going to have anything to work with regarding Nexgen. So now I come to Resources. And I'm going to download my installer. I'm going to rerun these installers, guys. I'm going to put brand new workspaces. I'm going to put brand new charts. And I'm also going to make sure that I clean out my database. I'm going to go to Tick and Cache. I'm going to get rid of all the data. I'm going to get rid of all the charts. I'm going to get rid of all the templates. And then I'm going to run my installers. This takes just a second. You guys have probably all done this. You're going to accept, click next, and it's just going to install all the good stuff. Get you in a point to where I'm going to have brand new workspaces. I'm going to have brand new templates, and I'm doing this because this is a good habit for you to get into. And as we come into the weekend, I'm going to finish that out. And I'm going to hit close. And now I have all new stuff, guys. So if I open up my NinjaTrader, NinjaTrader 7, 64-bit. Now I'm just going to put things kind of back the way I wanted them to be. Whoops. NinjaTrader is going to show up. I just heard my ding. It went somewhere in here. You could also find the current templates. So I'm going to open up my NinjaTrader. It says that my NinjaTrader is open. There we go. Trying to open my NinjaTrader. There it is. Up comes NinjaTrader. Workspaces. When I go to open my workspaces, you can see that I have everything now. And when I open up crude oil, It's going to put them on my wrong screen, but that's okay because that's going to come up in just a second. So guys, the reason I'm doing this for you is, one, I want us to match up. I think it's important that what you see and what I see kind of lines up with one another. I also think it's important to be able to understand this, to be able to use the tools and go through. So while that loads up, let's look at a couple pictures that were posted today. Let's go through. We'll start reading charts as those charts come up. Got a great one here, Buckle Blue. Picture perfect, right? Exactly what we talked about earlier in class today. Everything is down. Everything is strong. And Buckle Blue, you absolutely nail the entry right at resistance inside of favorable large triggers. I see that you take profits. What is that? 97? So 317 ticks right there at the trouble spot. And Buckle Blue, great thing to notice, when you have this much momentum and a clear path, that's your opportunity to hold for a little longer move. Great trade, awesome momentum, great direction. Bobby T taking the exact same trade, getting in a little early here, right? It should have entered between the triggers. Great annotation on the chart. Extra 4 ticks, less risk. Extra 4 ticks and profit. You're still able to take profits all the way down to those 1-to-1s. Picture perfect all the way. Looking through, not a lot of charts coming up today, not just yet. Claire, let's see what you did. Claire waited for that breakout. Waited for every trigger to match. There's that entry that we talked about, absolutely beautiful. And then circling what could have been a second opportunity to get up to the next level. And Claire, thank you. That's kind of the chart that sparked me rebuilding mine. I want to make sure that I'm consistent with you guys. Safia, getting in a little bit early. Just a shade early, right? Trading into those termination conditions. Great job recognizing 3 divergences at the area. Nice job. And just like John said, don't forget to show us those losers too. Because 11 points on 3 contracts does not equal to 1250. We always notice that. Nice trading. Let's see if we have some charts. Guys, here's my 5-1. Brand new, easy peasy. And then I'm going to pull up my 13-2. And guys, we are ready to work, aren't we? Whoops. So what did that take? All of 6 minutes, I think. And Jam, here's my newest right here. Guys, that took about 6 minutes to make that happen, didn't it? We're able to do it, waste a little time. That sure is pretty. Termination condition creates a full reversal. That's my newest. Oh, that's crude, isn't it? I opened the wrong one. Sorry. So let me open up my ES. Workspace. Open workspace. There it is. So I'm going to get that S&P up. Sorry about that, Jam. I didn't remember which one that I looked. That I did. John, you rebuilt for fun too. Hopefully it looks good. Shouldn't take too terribly long, guys. It really never does. It'll take you more time to put your charts back where you want them to be than it will to go through that process. And this is one of those things, if you get in the habit of doing it every weekend, you get to put yourself in a great position. And there's that one that we just saw, right? Paul, careful. Paul loves that bottom. Pivot, stop out, no triggers through, full reversal, odds favorable, perfect entry, and Paul taking profits all the way up. It's easy. when it looks like this, isn't it? Everything says up and strong. Everything says up and strong. And just for grins, everything says up and strong. Paul, picture perfect. And guys, when people post these charts, when somebody posts a chart in the room, you are more than welcome to comment on it. You're more than welcome to ask a question about it. And you're more than welcome, if I say something and you're like, hey, I don't get that, raise your hand, let me know. Guys, I want to go to Discord real quick. And I know that we talked about this a little bit earlier, but I want you to go to this weekend. The example trades. Go into the self-training. Taking the weekend, going through, learning how to do what we do. Get familiar with the terminology. Get familiar with the look of the indicators. Scroll through. Click on each picture. And what it's going to do is it's going to begin to create this repetition in your brain. That repetition is going to create confidence. You're going to see an awful lot of pictures using the checklist for every trend trade. You notice? Pre-trade picture. You'll be able to identify, to pinpoint with accuracy where the market is likely to continue. You'll be able to pinpoint with accuracy where the market is likely to go. Use it for profit targets. But there's a certain level of repetition to get you where you want to be. All right, looks like our S&P is up. So let's put it into position so you guys can see it. And hopefully we're 100%. And guys, thank you for bearing with me on that. I think it's a great lesson as you come into the weekend to do that. I also think understanding that you are, in fact, in the best of the best position, that you know everything is good, fresh, brand new, makes you feel good going into it. If you rebuild your charts, if you rebuild your templates, make sure that you take a second. And on your 5-1, you're going to have to reinstall your ATM strategy. You're going to have to make sure that you have stops and targets in place if you're going to do it. And did that line up with what you guys had previously, John? There's a range and a breakout as we come in today. There's that range. There's that breakout. Yep, looks like I'm 100% in line with you guys now. If you took the medium probability trade right back to these one-to-ones, a second divergence triggers inside, lets you know that it has the potential to push lower. Little bit of chart reading here. And this looks very much like what we looked at earlier, isn't it? Smalls inside of the large, anything can happen. Get the right looking one. Anything can happen. Smalls inside of the large, anything can happen. 1, 2 losses of momentum, and see how that market tends to push a little bit lower. Dab chain, I'm not sure that there is any action on the weekends, and that's kind of a funny comment. I'm not sure which markets trade all weekend long. Typically the volume's pretty low. Makes it a little, it's like watching paint dry. So Jam, there's the new ES. It lines up 100% with John. And at Snagit, you can right-click on all the arrows and presets in there so you don't use and delete them. Oh, that's a good idea. Sunday, 6 p.m., you can trade. You can go through and trade. Claire, let's see what you did. Exactly what we just talked about, right? Losing momentum. Perfect entry is low risk. Opportunity to make money on the way up. Second divergence with weak triggers. Claire, absolutely beautiful exit. Nice trading again. We'll just use Claire's picture real quick. I want you guys, actually, you know what, we'll go back. I'm going to do a little zooming here, guys. As we come in and take a picture, I want you to be able to recognize this. Price, how many times is that going to happen? Hypoxic, I am on NinjaTrader 7. The software is 100% the same for both, for 7 and 8. But we literally just deleted every workspace, every template, and rebuilt brand new, fresh in class this morning. So I am 100% brand new and only 10 minutes into it. One of the termination conditions that we look at, guys, is mid-band is a termination condition when the triggers are a full bar away. Price reaches, show me a picture, Hypoxic. Take a picture of your chart. Let's take a look. Price reaches a mid-band. The large triggers don't follow. Guys, this is the gap theory. This is an indication that shorts in this area are a bad idea. When price snaps away from those synthetic triggers, when price pulls away and reaches that Fibonacci area, support, resistance, one-to-ones, mid-band, it typically snaps right back to those large triggers. This isn't necessarily, I know, right? It does. It isn't necessarily a trade setup. Remember, 90% of what we do is chart reading. It's not giving you an opportunity for maybe a long, fighting all that strength, fighting that direction. But what it does is it's going to help you recognize when short attempts aren't the best. Maybe there's a 50-50 trade going on right there with an area with the potential to break but hasn't broken. And as you come back, it lets you know. Let's circle it on here. That gap acts as a vacuum. And notice that that circle is dead center in that area where price typically snaps back, keeping you out of that trade, letting you identify patterns. And there we go, divergence prints, divergence, divergence. Claire took the last shot at the long there, and now we're in a waiting pattern, right? Now we're waiting for either odds favorable momentum and a clear path, or as price reaches this area of support, we have to ask ourselves, where are those trigger lines? Well, once again, as we reach Fibonacci support, notice that the large triggers are still more than a full bar away. They're above that reversal bar marker. So in the moment, the expectation is for price to snap back and close that gap. Absolutely, Safia. Yep, so Paul, the first part of it is an area is reached. They pull away, the area is reached. It's what helps create that bounce. All right, Safia, so you want me to explain anything can happen? I love the way you asked this question. That's the perfect way to do it too. So I'm going to go back to the education page, and I'm going to go right to the tutorials, and we're just going to go to rule number 1, Safia. I'm going to make this as big as I can for us. Take care, Gary. Here we go. All right, so a little trigger line. Anything can happen. So Safia, rule number 1, right, is that odds favorable momentum, that small above the large. And guys, this is a great one for everybody. Small above the large are wide, they're angled in the direction of the trend. The odds are favorable for the market to continue up. This is your best look on the 13-2. This is your strongest look on the 13-2. This is the one that lets you know that that market is pushing with amazing force in the direction of the trend. Safia, does that make sense? So far, so good? And not just Safia, really anybody and everybody. So Safia, when price and this trigger lines, those smalls come down and they work their way inside of the large triggers, we call this the weakening of the large triggers. And I use that phrase, anything can happen, because when the small are inside of the large, anything can happen up or down. So when I'm taking a moment to annotate my charts, when I'm going through and I'm looking at my trigger looks, right here I can identify strong triggers, odds favorable, right? And right here I can identify anything can happen, meaning anything can happen up or down. They're weak. So I look to my 5-1 chart. You'll notice that I have that same weak trigger look and a divergence on the 5-1. If you take one more shot at it, that second divergence, those trigger lines inside, that weakening of the triggers, I see loss of momentum on both of my charts, letting me know that I don't have that odds favorable momentum anymore. And typically this is the result when you visually see that slowdown. Does that help? I hope that helps. So for me, it's just a matter of the language that I like to use. When I'm looking at trigger lines, I want odds favorable. I love the way that sounds, the way it rolls off the tongue. I absolutely love that feeling it gives me about my chance of success. And then if I get in the habit of associating those weaker triggers, anything can happen, it reminds me that I have to make sure that I've got plenty of advantages in every other location on my charts to look for an opportunity. I take a lot of pictures. So once again, odds favorable, smalls below the large are wide, they're angled in the direction of the trend. We haven't reached this key area yet. This is one of those potential 50-50 trades. This is a trade coming through an area that has the potential to break, but hasn't broken. If you are embracing simplicity and high probability, my plan says on a 50-50 trade, divergence shouldn't be present. Your plan may say something different. But it meant that when this divergence printed, if I had a limit order just waiting right here, I clicked on that red X and I canceled that order. John says the double divergence pivot stop out on the 5-1 tells you the weak triggers on the 13-2 is powerful for reversal. Same picture. Small triggers inside, double divergence, smalls inside, kills the trend. John's just trying to be like me today. I love it. Hypoxic. You're on Eastern, 50-50, divergence. So hypoxic, the first, that's crude, right? Oops, workspace. Let me open up my ES. It looks like, hypoxic, that you and I are running a little different. Maybe different days back, maybe different fib multipliers, and maybe a little bit of data. And then John, I think, put a note in there as well, talking about how there may be a little something corrupt. Mine is 100% fresh on the day. And guys, if we don't line up, and again, this is a great practice each and every weekend, start fresh on Monday. Walk into Monday morning with that confidence, knowing that everything is brand new, knowing that everything is fresh, that all your data is right where it needs to be. It's a simple process. We did it together in the room today. It took about 8 minutes, I think, start to finish. And Bobby T, you will definitely notice a difference between micro and normal because they're two different markets. They're not the same market, right? Micro and normal, one's a micro, one's a normal. The volume on them is different. The fibs are going to be different because the pivots are different. Divergences on the 5-1 chart with strong down small triggers, way below the large. John's ignoring the divergence, just like we said. Oh yeah, they're definitely different markets. When you have the advantages in place, some people will have a plan that's different. And no plan is wrong because it's different, guys. I can't stress that enough. Just because my plan and your plan don't line up, it doesn't mean that I'm right and you're wrong, and it doesn't mean that you're right and I'm wrong. It means that you and I have a different comfort level, that you and I are at different points in our chart reading. You and I are at different points in our ability to understand and accept risks, and we may be in different points to be able to manage these trades. And what you find is the more time you spend in the markets, the more time you spend reading indicators, and guys, even more importantly, the more pictures you take and post in here for feedback, the more times you say, am I reading this right? What do you mean? The more comfortable you become with trades like this, because this went from 83 all the way to 75.50. Absolutely. So hypoxic, when we talk about a window of opportunity, here's the top of the triggers all the way to the bottom of the triggers, right? So that window of opportunity from your lowest point of resistance to your highest point of resistance. Ideally, in a perfect world, to give yourself the absolute best look, to give yourself the highest chance of success, your trigger lines are trending one on top of the other. And what that does is it creates a smaller window of opportunity, right? It creates a smaller area where those areas of support and resistance can come together. A little less risk. It's a little more streamlined. And guys, what do we see now? If you took the trade, 3 divergences, small triggers working inside, support is reached, absolutely no trigger lines through, and here comes that potential bounce. Hypoxic, did that answer the question for you? The bigger the split, the more potential. I need to get rid of this untitled one. The bigger the window of opportunity. There's your S&P. There's your crude oil, looking very similar, isn't it? Coming from a termination condition that creates a full reversal. The smalls are trying to break through, but notice that none of the triggers on my 5-1 have made it through the area. I haven't cleared the area here. Once again, chart reading is going to help you make a decision on whether or not an entry up here at resistance is for you. If you're a high probability trend trader, your rules weren't met. Paul says, great momentum. I agree 100%. Small window of opportunity. Pivot stop out here, Paul. Says enter at the pivot stop out, doesn't it? Absolutely beautiful. Profits, divergence prints, could have gotten out on that third divergence with the smalls inside. Triggers inside, party over. Paul, amazing chart reading on that one. Notice that he starts on the 13.2, and let's just talk about that. What does he see on the 13.2? He sees odds favorable, right? Sees no terminations. Has that 50-50. Pivot stop out. He understands the expectations through chart reading. When I see a pivot stop out here, I can at least expect a pivot stop out here. It lines up with everything. 2 divergences on a 50-50 isn't everybody's trade, is it? Especially on a market coming from a good bottom with a bad top. And here we go. Very often, when the market doesn't reach that key area, we came close, didn't make it. Remember, guys, we're not the only ones that know about these Fibonacci areas. If we were, the market wouldn't do what it does. Resistance to the tick, support to the tick, triggers don't follow, market continues up. Doesn't make resistance, pulls all the way back to support to the tick. If things change, we can expect continuation up to 40.96. We saw that range this morning. There's that support to the tick. Guys, you know where the market's likely to go based on Fibonacci. When we get to that area, look at the momentum. The area breaks, losing momentum at the area holds, even if it's momentarily, and as it comes back to it, odds favorable. Weak triggers, mid-band, large triggers don't follow, support holds. Just going to keep working those patterns, guys. Keep working those patterns. Keep building that recognition, that repetition. Ask your questions, and you're going to be able to read it. Jose, termination condition, absolutely beautiful. Market's beginning to push down, but you're fighting that odds favorable. All your trigger lines are still up. Large trigger lines are still up. Everything says up on the 21.3. You're pulling back to that resistance. Jose, you're putting a lot of faith against that strength, and no triggers rolling or below the area yet. It's a lot of trust in that resistance. Maybe a little soon, a little premature. Often with this much momentum into an area, we typically see a bigger bounce. You had a second lower divergence, but everything's still going up. I like it. Oh, and I was hoping John would share this story. Jose, it's a great read. It's a little early, but everything worked out great because of your ability to recognize termination conditions and trigger location. That's what I wanted to say on that one. When John Novak was developing the software, he spent 6 months every day calling the S&P pit in 2000 when he was finishing the Fib algorithms. And he had a guy in the pit whose job it was to know where the large institutions had their big orders for the day. And yes, they know before the day starts. And he told him, I would call him, tell him where the areas are, and every day nailed the areas. And that's when he knew the Fibonacci algorithm was right. John's read, odds favorable with the pullback, looking for that area of resistance to hold after the third divergence. With that much momentum, he's lost the momentum, expects the push up. All this momentum expects the return down. And guys, it did exactly what he said it was going to do. Chart reading. If you're a new user, if you're a high probability trend trader, guys, it's a termination condition. Plain and simple, it's a termination condition. What are the things that we're taking into account? Odds favorable momentum. Remember we said when you go into an area with that much momentum, it likes to retest. That's one of the best momentum looks that you could ever have. And notice that the market pulled back to an area of resistance and every trigger line was below it and strong. And it lines up right at the top of those synthetics. Guys, what looks like an absolutely suicidal trade into a blue line, with a little slowdown, with a deep breath, and putting each piece together, it really turns into a great opportunity for a retest on the area. And that's the difference. That's the difference between someone who's got the ability to read charts and somebody who's learning to read their charts. And then straight from the manual, notice the weakened triggers, supports reached, the weakened triggers, and supports reached. John, that's great chart reading. That's a nice trade. I like what you did. Ron's got a little different approach. Ron's a big fan of letting areas cleared with a lot of momentum and just doing a little target practice, right? Get in, get out. $100 at a time. Do that 10 times a day, Ron. You'll never work another day in your life. And Claire, absolutely. Claire's ability to read the charts gives her the exact same read, the exact same entry. And what a beautiful exit. Claire, nicely done. One thing that you'll notice on both John and Claire's charts is their 5-1 Fibonacci trick, or their 5-1 fibs aren't on their 13-2. They're letting that 13-2 really lead the way. They're creating an awareness, but they're looking for 13-2 areas for those key terminations. I love everything about that trade, guys. I think it's a great read. Probably won't anyway, Ron. Carl, you say it's a great top. Everything rolls, even though that fib is here with the triggers wide, with the background red. All charts, everything says go in, and you take the trade. Very much the exact same trade that we just saw, isn't it? When you can gauge the momentum and say it's advantageous, when every chart agrees, when you have odds favorable momentum on each and every chart, guys, it's difficult for that market to stop on a dime and turn. Carl's got the reps to know that, right? Carl has the reps. Claire has the reps. Ron has the reps. John Novak has the reps. It just takes a while, right? Takes a little bit of time, takes a little bit of study. Pivot stop out on both charts usually kills a trend. And there we go. Wait mode activated. Can't go short anymore. 3 divergences in the same location. At a termination condition, large triggers are beginning to roll. Small triggers are broken above the large. We're letting our small chart show us the change that's happening on the large chart. Remember we talked earlier, when price doesn't reach that key Fibonacci area, it's very rare that it doesn't give it at least another shot. Sometimes it takes a minute. You're witnessing the fight between buyers and sellers right here at these key Fibonacci areas. So there's our S&P, wait mode activated. Termination condition to the tick. Once again, look at that on crude oil. Straight to support, 1-to-1 support, weak triggers, right into resistance, and the large triggers don't follow. Good opportunity for a retest, and that's exactly what it seems to be doing. Everything that we do comes through repetition, repetition of patterns. The repetition of being able to go through and recognize odds favorable momentum. The repetition of being able to open your charts and instantly realize when you've come to one of these termination conditions. And the repetition of understanding the process of waiting for the retracement, identifying the window, trusting it to take the trade. And guys, all you're doing is you're building this memory over and over, muscle memory. It's like going to the gym, it's like playing golf, it's like playing tennis, swinging a bat. The more you do something, the better you're going to get at it if you're doing it right, if you're practicing the right way. And then you can go back and you can check yourself. Well, let me take this picture from the user manual. Let me compare from the entry section. Do my entries look like the entries that Nexgen is teaching? Are my entries at areas inside of favorable large triggers? Am I getting in early because I'm afraid the market's going to go without me? Am I getting in late because I don't have trust in the areas? You can begin to come through and do that study over and over to look at these pictures, to compare what you're doing and what you see. Trend trade coming through, continuations. All of this is available to you. And the best part is you can take any one of these pictures, and if you don't understand what you're looking at. All you have to do is take a picture of the picture, post it in the room, and let's talk about it. Buck Blue, let's see what you did. Buck Blue takes the first trend trade. Absolute perfect, nails it, takes profits off. Takes the second trend trade. It just pulls up a little higher. And Buck Blue, do you see how you could have taken that one all the way down to that area of support? Little more opportunity there. Left some meat on the bone. Every indicator on every chart was still saying down. Even your small triggers had turned in the direction to come back in and retest support. But I got to tell you, man, absolutely amazing. First week with the software, right? Yep. Is it doable, Buck? I always ask people in the first week. Some people see it in a week. Some people it takes a little bit longer. Guys, everything we do has been proven. John's been teaching this for 25 years. We've had live classrooms for probably the last decade and a half. Isn't it, Ron? It's amazing. And the biggest thing is it's sticking to the plan. It's keeping it conservative. It's going after it. It's waiting for advantages. Guys, there it is again. Price comes in, reaches a Fibonacci area of resistance. The large triggers don't follow. And the market pulls right back to those key areas. And this time it hits it. With the smalls on the wrong side of the large, we get one of those pivot stop outs. No more short trades. We have the potential for a bottom, but we're not there yet. Once again, you're in wait mode, waiting to determine what those deep pockets investors are going to do. Are they going to keep pushing it down, or are they going to let those trigger lines roll and then do it? You think self-education chart reading pages on Discord are really shortening people's learning curves? And you know what? I think it is for sure, John. And I think that being able to, guys, having all the information that you need consolidated into this one key spot, the absolute best of the best still pictures, and those still pictures that are annotated. There was a time really not that long ago where new users, where demos go, hey, go watch this video. It's 3 hours long. Try to absorb it. Well, what we've done, and big props to John Novak, is there has been this quest for simplicity over the last couple years, being able to take everything that we do, 20 years worth of knowledge, and giving it to you in the most concise way possible, and then being able to utilize Discord, being able to come in to confirm what you're seeing, to ask for help where you need help live 15 hours a week, to have not only me here in the education room dedicated to helping you. Yeah, and props to your 20-somethings for getting the old man into Discord. You also have John coming in, bringing all that knowledge, helping out with your reads, helping out with that chart reading. Everything says down, guys, and the market tends to continue down. Now we're just waiting. Is it going to break? It's not broken yet, right? It's too soon for longs. I don't even have small triggers on the right side of the large. And it's not soon enough for shorts. And it does take a village, guys. There is so much conversation that goes in behind the scenes. So many pictures shared, so many patterns analyzed. Back before I was on the West Coast, John and I would typically take 2 hours pre-class, just talking about patterns, talking about setups, talking about better ways to teach it to you guys. We get feedback from Smiley Face Cameron here, from Chris, from Mark Dean, from Jim. All these guys are working together to help get you to where you want to be. Paul, what you got? 100% winners, 6 trades? Heck yeah, Paul. That's a good day, isn't it? Paul, what's different? What's changed? How did you get to 100% winners? Blew out an account on Tuesday? All right, give me the Sunday school answer. How did you blow out that account? If you don't mind, or I've got the microphone. I know the answer, it's rhetorical. You chased everything instead of the best, didn't you? You took everything that you saw rather than everything that fit the rules. And guys, that happens, right? Oh my gosh, I just said exactly what you just wrote. I didn't even look at that. I know, because it's common, right? You learn to read your indicators. And when you learn to read your indicators, you start saying, well, everything continued down and everything turned. This is my short. But it's not, because it's too soon. Absolutely, Gary, replay it. So you get into this point where you go from following the rules 100%. And I'm going to share this story because it's Friday and it's story time. My previous job, I worked for a pretty popular Tex-Mex restaurant down in the Southwest. They're all over now. But I trained managers, and that was really my specialty. When I wasn't a general manager, I was the guy. They would fly people in from Florida, from the East Coast. They would fly people in from everywhere to come train with me, to learn systems and routines. That was my thing. And I made a checklist for each and every one of these managers. And they would come and they would work with me, and it was required. 30 days, strict adherence to a checklist, 100%. 30 days, here's your checklist, do it. And guys, every one of these new managers were just absolute prodigies. They couldn't do anything wrong because they focused on the checklist. Well, but 30 days, the average human being decides that they're too smart to stick with what's made them so smart. The average human being will say, well, I don't need the checklist anymore because I'm freaking brilliant. So now I'm just going to go trade what I see because I'm the best chart reader ever. And they typically make mistakes. In my line of business, they typically lost money, upset staff, stuff like that. The average trader, when they make that decision, typically begins to lose because you start saying to yourself, well, I'm going to go long at this blue line because it's a blue line, and I saw this hold the other day, and I'm going to go short at this red line, and you start making decisions based on what you think rather than what your rules say. So don't fall into that trap, guys. You've got such a great opportunity, to do well, to be consistent. And Buck Blue, the videos they're very helpful. There's so much out there for you guys. Take advantage of it. Take advantage of having us in the room. Take advantage of this every day. Paul, you got a message in there from Jose. All right, 1050. Paul, what'd you do? I don't think I saw this one, did I? Looking at that momentum, 50-50. Higher entry with divergence. You were looking for that top end instead of the bottom. And guys, I think that this kind of brings a pretty good lesson. I'm going to take a picture. Just talking about why we get in at the bottom instead of the top of the window. And it has everything to do with momentum on the 13-2. It has everything to do with strong trigger lines. When I have strong trigger lines on the 13-2 and everything says down, the odds of a deep pullback on the 5-1 start to go down. They really do. In this case, Paul had divergence on the 5-1. He had a visual slowdown in the form of divergence and took a shot. This is where you can get in at the lower with that much and then keep your stop in place, because sometimes it's going to miss you if you're a little bit below. So letting the 13-2 lead the way, let the momentum lead the way, and let the momentum be the reason that you get in where you get in. And then here we see two losses of momentum, small triggers inside, and sure enough it pushes right back up. But the odds favorable momentum on the 13-2 once again says pivot stop out here. creates a pivot stop out here, and that market begins to continue right back down to the key area. And absolutely, once you have a baseline, once you have a foundation, the foundation that education provides, the videos really start to mean a lot more. If you watch a video and then go trade for a couple days and then come back and rewatch the video, it's pretty awesome. All right, Finch, getting in a little bit late, right? I'm assuming it didn't quite get you. So you got in with everything saying down, we're able to make a little bit of money there. Nice job. Very nice job, Finch. And I like that. Paul, you said that you started it, you hit the drawdown, and now you're going to simulate, right? Get back in and build those good habits. And guys, I think that that's an important part of what we do. I'm going to go to the user guide one more time. I'm going to go to the manual. There's a market replay section, guys. This is great for each and every one of you. Go back and replay the week. Find your opportunities during the week. Practice, 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 practice following your rules. But one of the biggest challenges that we see is, guys, this is your path to becoming a confident trader ASAP. Posting your trades in class is the start of it. Being able to take those pictures, put them in the room, get that feedback, make sure you're doing what you should be doing. And then remember that spreadsheet, tracking your performance in that spreadsheet, going back, looking at it, making sure that you're being consistent, making sure that you're not creating patterns that aren't going to help you out. And then here's the path. Hey guys, this path has been in place for years and years and years, and most people fight it because we are so darn smart. We are, let's admit it. We're all brilliant here, right? You got to learn the rules. You got to know when it's okay to take that trade, guys. There's a high probability trend trade checklist that was provided. I'm going to do it again real quick. I'm going to close these out so I can share them in the room. I'm going to give you that high probability trend trade, that ability to police yourself. I'm also going to give you a copy of the example plan. And just because you guys are my favorite, I'm also giving you a high probability trend trade checklist that not only has the rules, but also has pictures of what they mean, straight out of the user guide, straight out of the manual, to help you understand what it is you're looking for. And then simulate those trades daily, guys. Get on simulator, pull the trigger. Get in there. If you think your rules are met, pull the trigger, share it in class, let's talk about it. If you're sure your rules are met, pull the trigger. Take a picture of it, put it in class, let's talk about it. And this is the most important thing. You cannot practice the wrong trades. You can't create the muscle memory that it's okay to do it wrong just because you're on simulator, that it's okay to break a rule because it's not real money, because that's how you're going to end up trading when you go live. Simplify, market replay, fix your mistakes, take those pictures, and repeat this process until you always take the correct trades. And that's a powerful phrase. Always take the correct trades. Always take rules-based trades. Because if you're taking rules-based trades, you're taking trades that have been proven to win more than they lose, which means that you've guaranteed yourself that you can win. And that's when you go into the idea of trading live money. And thanks to prop firms, you can trade live money without trading your money. Apex, Elite, Top Step, all of these people put you through a combine. Make sure that you're focused on profits, that you're focused on money management, that you can adhere to rules. And when you pass their combine, they'll fund you. There's a lot of people that are doing it with Nexgen right now. There's an awful lot of you that are doing it. There's some of you that are funded, that are making money, taking 90% of everything. There's some of you that are still working out the kinks in your plan, participating in class. But guys, scroll through, look at these, see if there's a good fit for you. Don't practice losing, David B. Amen. Area likely to stop the market, it continues down with momentum. Area likely to stop the market, continues down with momentum. Clear path, hits resistance. There's another one, pivot stop out. Pivot stop out, market's continuing down, over and over and over, guys. First profit target is 200 per for John. Rules say don't lose after the first target. And practice following the rules. You will lose even following the rules. Try to be real honest about that in here, guys. I think it's important for people to remember that if you take 100 trades and every one of them follows the rules perfectly, you have to be ready to lose 30 of them, and you don't get to decide which 30 it is. You don't get to determine. You don't control the market. The only thing that you are in control of is whether or not your rules are met when you enter a trade. Anything can happen triggers. Here's our third divergence and the small triggers inside. Can we agree that the likelihood of the market continuing down has gone away? Divergences, triggers inside, triggers inside. And there it goes, up beyond those large triggers. 80-70. Potential spot. David, I think it's very much human nature to break rules, to branch out, free spirit, all that thing, whatever you want to call it. And I think more than anything is nobody breaks rules, I think, with the intention of saying, hey, I'm just going to break these rules. I think more people don't follow the rules because of hope. Because I hope that this happens, because if it happens the way I hope it does, well, then I get to make more money. I hope that this red line holds, because then I can do this. Vince, you say you managed out too soon. Taking a momentum style trade, everything says up, everything is strong. You take a quick little stab back out at the one-to-ones. If you're going to take momentum style trades, the typical rule of thumb, momentum in, momentum out. Let the loss of momentum take you out. And then George T, you say you're out because everything's above the triggers now. You were trying to hold for those fibs. George T, great read. Taking that information, right? Out at 67. It's just getting dicey. Oops, sorry. Did I miss it? I sure did. I apologize. Guys, every now and then I'll miss one. Make sure that I don't. All right, in this scenario, could the divergence on the 5-1 be considered a trend trade because the area is inside of the large triggers on both charts? Or is this an HVA since the fibs terminated the trend? So, Jam, take care. We'll see you next week, I hope. So, George, for me, there's a couple things that I see on this one. For an HVA trade, really, you want to come from an area. And if you go back to the manual and you look at the HVA trades, it says that you need to have a good termination condition on the 13.2. And we really don't. We just have a pivot here, right? So I don't have a termination condition. I've just got an area. I just have a pivot. And the second thing here is I've just reached resistance and those large triggers are a full bar away. So you're anticipating the snapback to the triggers. And really what you're doing is hoping that this momentum continues up. At the time of entry, large triggers are still down on your 8 range. Synthetic triggers are still down on your 5-1. You do have momentum, but it's directly into resistance that just held. I'm not sure that this is an actual trade. I think that this look becomes more advantageous if I'm coming directly from a Fibonacci area right here. If I've had something, Rob A, have a great weekend. Thanks for being here. Does that make sense, George? I think that if you have that great termination condition right here, this is a great first look. And if you're omitting this fib above you, this is a great first opportunity for that continuation up. That momentum carried you to the retest. I think I'm going to have that put on a coffee mug. Odds favorable momentum typically gets you to the retest. One of the reasons that we let these trigger lines roll the way we do, one of the reasons why we don't take trades right in the middle of this vacuum. And just like John said, if you get a trade that ends so let's say you're waiting for this entry. When everything rolls in the favor of the trade again, it creates an opportunity to get back in. So if you take that perfect trend trade and you have to manage out third lower divergence, the rules are still met, everything still says that it's up. When those small triggers roll, that little pullback right to the midband, right to the small triggers for continuation. Same thing here, if you take the trade, you have to manage out, market pushes down, all three triggers start going the same direction, and you can take that little stab back right to the area, right to the small triggers. And the one thing that you'll notice more often than not is the perfect entry on the first one almost always lines up with the continuation entry. The perfect entry here almost always lines up with the continuation. And the great thing is this theory, when the perfect trend trade doesn't work, when the perfect trend trade has to be managed out of, if these never roll, you're not taking multiple shots at a trade that isn't working. You're not trying to get in, get stopped, get in, get stopped, get in, get stopped. You're creating that set of rules. You're creating that, well, if I'm going to take another shot at it, I want my smallest momentum indicator in favor of the trade. I'm a big fan of the continuation look because not every trade's going to work on the first shot. But we read charts well enough to do it. Same trade, same reasons. Love it, Ron. Just $100 a pop, right? Get in, get out, every advantage for $100. Do it on a 10 lot. Do it on a 100 lot. Oh, you got 20 on that, huh? No worries, George, let's look at it. And I think that we have, and this is a good one right here, just from the rules, George. The large chart must have a termination condition present. And when you talk about that termination condition, let's come through. Back when we had some. Pivot, stop out, no triggers through is a good termination condition. Area of resistance or support, no trigger lines through. This is a great look right here. As the market pulls into that key area, otherwise what you end up with is just a pivot. And even on your picture, you've got a great pivot. There's divergence on it. There's 3 divergence here. It's the potential for a pretty good bottom. Coming straight from the fib, it's a little better. And then because it's not from that area, it hasn't reached that key Fibonacci area yet, your target is reached, but with momentum, there's that you can anticipate a retest. Your entry spot is picture perfect, the pullback to the large triggers. But the fact that this isn't coming from a termination condition, it's only a pivot, the HVA rules aren't quite true. It's more of a chart reading, and it's really good chart reading, but it's not an HVA trade, so to speak. Does that make sense? The termination condition definitely strengthens the move when it comes straight from that key area. And then I think John just gave us a good example. See if I can open that. RJ, go to tech. So from that Discord, scroll all the way to the bottom. Jason will fix most tech questions. If you want to ask it here in the room, I'll see if I can help you. So John put in here, pivot, not quite an area, right? Here's your first target. And then if all three triggers don't roll down, you're not looking for that continuation. Yeah, Jason's amazing and he's fast. But RJ, feel free to type it here. I'll see if I can help you. Claire, helper divergence, trend direction, just an area of resistance likely to hold, right? Momentum from Fibs didn't work out. 13.2 area below. I like the other direction, Claire. I think this one a little aggressive. Not quite ready for longs there. RJ, how to start Nexgen? You went to NinjaTrader? How have you been doing it all this time? Open NinjaTrader, right? And then once you open NinjaTrader, you get your control center. Oh, really? So you should be closing it every day, RJ. Oh, this is great then. So double click on your NinjaTrader. You've got that open then, right? File, workspaces, open your workspace. You've got crude oil, S&P, and then that's going to bring up your workspaces. And then that'll get you moving in the right direction. There is no file. Then RJ, let's get you to tech. Will you go over to Discord and go ahead and put in that tech support ticket? It sounds like you've got a little more going on than I can fix. And just for John, I'll hide those names there. Awesome. Jason will get you fixed up. No time at all. So guys, here's crude oil. 3 divergences in the same general location. That should be a good indication. 50-50, flat triggers. Tough look. Everything below pulls right to resistance, guys, once again. Closes the gap right back to those large triggers. And George, this one we'll see what it does. But notice that the pivot's not from an area. This is very much what your picture looked like, right? Not from an area. Large triggers don't follow. The market will probably close that gap. That gap close looks almost the same as yours did. Not necessarily a long trade. In a lot of instances, especially with flat triggers, what you'll find is the market continues to move down, especially when we've been in a big down smashing move like this. So you can identify where that pullback is most likely to come from. And if you have something going on there that helps, that's great. But it's not necessarily a trade. It's really more of a chart read. If this were coming from Fibonacci support, if I had a big fat blue line right there, I would be more inclined to take this shot. But because I've already reached resistance, none of my triggers have broken through. Absolutely. Dab chain, you tried to go short here, back to the large triggers. Does that make sense, George? Does that help clarify a little bit? Awesome. It's a very common look. When it comes from a key Fibonacci area, there's a lot more strength to it. All right, dab chain. Took the short directly into termination conditions, right? And unfortunately, you had already reached those large triggers on the pullback. This is more likely to continue up than it is to continue down. Does that make sense, dab chain? Termination condition was picture perfect. Yep, perfect example of how trading into a fib doesn't work. And then if you were going to try that slingshot up here. Oh, you did. You got 3 entry there, right? I think it's your desire to add on to trades when the target's hit. That's going to be your pattern that we're going to work through. You just got to where you were going, and you're like, I'm going again. And this one up here with these strong triggers so much, you can get the exact same entry if you wait for a close on the other side of those triggers right at the key area. See that? This one is right into the smalls against you. This is a close on the other side, showing that weakness right at the key area. It does move fast. Good stuff, though. Great read on that gap. And now it's just kind of working through right here, trying to make that decision. What's it going to do? Guys, 3 divergences in the same location hopefully keeps you out of that short. Now we have those termination conditions. All the trigger lines agree on this pullback right back to the mid-band, don't they? 80.35 look like a good first target. See how that just worked out, guys? 1, 2, 3 divergences. Everything rolls. Both charts agree. There it goes. That's what first-year NFL quarterbacks say about the same game. Tom Brady says moves in slow motion. You just have to know where you are and realize you will continue to get better at this for the next 10 years. Absolutely. Guys, I'm going to take just a minute, and then we're going to come back into the last hour. When we come back in the last hour, I'm looking for questions from you, pictures from you, anything that you want to talk about. Let's talk about it. Let's finish this week strong. I'll be back in just a few, and we'll get things going once again. Be right back, guys. All right, let's finish strong, y'all. Let's get through this last hour reading indicators. Once again, does anyone else recognize that this market is consolidating, that there's an area of resistance that they haven't been able to break through, and there's also these divergence lines that the market's never been able to get through with the trigger lines? Somebody's going to win, right? Somebody is going to push that to the next level. But until they do, we don't have an advantage. We don't have the advantage of momentum, of a clear path. If we come back to the S&P, resistance likely to stop the market, does exactly that on the pullback to the large triggers. There's that gap theory. And now we come back through. After the pullback, the triggers remain up. The small triggers are above the large triggers. The large triggers are wide. They're angled in the direction of the trend. Even without a reversal bar, I can identify where my area of support inside of favorable large triggers is going to be. Give me a Y in the room if you're with me on this one. This is how quickly you're going to be able to read your indicators. I have to know my plan and be comfortable with my plan. And if my plan says that if divergence prints on a 50-50 trade, on an area with the potential to break but hasn't broken, I'll have to cancel this order. If the large break through, well, then I have a clear path completely. So I'm always going through this process. What do I see? What does it say? What do my rules say? What is my plan if then? And we're just going to do this every day, guys. Rinse and repeat, rinse and repeat. What would you guys like to talk about for the last 30 minutes here? Does anyone need help with entries? Does anyone need help identifying a management plan that'll get you in a position to where you can begin to build your own management plan? Anybody curious about momentum? Let's do this. Let's take everything off but trigger lines. Make that chart big. Things that you'll be able to do. Price accelerates away. You're going to start saying to yourself, well, even without indicators on this chart, there was probably a Fibonacci-based indicator that created the snapback to the large triggers that didn't follow. Here's odds favorable momentum in a tail. I know that rule number 1 is met. I can circle. That's not a dumb question, Safia. Is there a range-bound plan available to play with, or is that just you just have to trade the edges and hope that they keep holding, dab chain? So Safia, if you're missing your entry, that's a great question. Let's go through and do it together. Let's put the indicators back on the 13.2. And let's do a bar by bar. Let's go through, Safia. We'll work together. We'll identify the momentum. We'll identify the lack of termination conditions. And then you and I together, and anyone else in the class that wants to participate, we're going to go through a bar by bar scenario. We're going to get into a trade. We'll activate everything that we need to activate, and we'll make it work. So $9.36. All right, are you ready, guys? And yeah, Dab, ideally you wait. All right. Guys, this is going to be a drill for understanding entries, okay? So Safia, on your 13-2. When I said bar by bar, got your attention. So guys, everybody work with me on this one. This is a great drill that you can do yourself as you're going through and looking for these entries. So the first question that we have to ask is, do we have odds favorable momentum on the 13-2? Is everybody comfortable with this concept? The small trigger lines are above the large trigger lines. The large trigger lines are wide. They're angled in the direction of the trend. Give me a Y in the room if you're with me. Rule number 1 has been met for a high probability trend trade. Does everybody see it? This is the beginning of looking for that high probability trend trade. This is the first rule that has to be met. Next rule says no termination conditions. Price has not reached an area of resistance, which means that I have the advantage of a clear path, right? So rules 1 and 2 are met on the 13-2. Is everybody okay with that? Everything starts on the 13-2. Rules 1 and 2 met. You guys ready to take some stress out of your life? I'm done with that chart. For right now, I have all the information I need on my 13-2. I could literally just keep my 5-1 chart up just like this. And now we're looking for the entry. And rule number 3, I'm going to type it into the room. We're going to use a limiter to buy or sell a pullback at an area inside of favorable large triggers. All right, so Safia, rules 1 and 2 are met on the 13-2, right? This is the look on our 5-1. The trigger lines are starting to come up. They're starting to open up. We have an awful lot of up bars. So what do I need to identify my window of opportunity, guys? What am I waiting for on this 5-1 chart as it's moving up? And I'm thinking to myself, oh my gosh, it's going without me. I'm never going to get paid. What am I waiting for on this chart? New users, demos, help me out. Not yet, Bobby T. That's where the trade's going to originate, but how do I pick my window of opportunity? Exactly, 10 km. Guys, we're looking for a reversal bar on the 5-1. Bobby, you're at a point in your chart reading where you already know what you're looking for before that reversal bar ever happens. But for you new guys, we're still waiting, aren't we? And there it is. There's my reversal bar. So at the time of the reversal bar, I'm going to identify 2 things. I'm going to identify where my large triggers are from top to bottom. 000, great job. Have a great weekend. Thanks for being here. And then, what's my window of opportunity? So Indu, when the 13 is super strong, I'm looking for, let me answer that question. This is going to help you out, okay? Let me go to, that's a great question. On my 13-2 chart, I'm looking for momentum, and I'm also looking for termination conditions on the 13-2. Indu, when I'm looking for those areas that may stop the market, I'm looking for these on the 13-2, right? I'm looking for support, resistance, 1-to-1s, magenta divergence highs or lows, that mid band. All of these are 13-2 termination conditions when looking for that trade. There's only one condition on the 5-1 that I'm really looking for in the beginning when I have rules met on the 13-2, and that would be 3 divergences in the same location. One of the great things, Indu, Safia, is what this 1-to-1, if it were on a 13-2 termination condition all day, what's it doing for me on the 5-1? It's given me a spot to create that bounce, to give me that pullback. Does that make sense? And then, awesome. And then 10 km, you say the divergence will take place with 3 bars. Absolutely. I'm not going blind. I'm going with the advantage of momentum. I'm going with the advantage of no termination conditions. Remember, this is my look on the 13.2. Can anybody find any reason that this market shouldn't continue up? Odds favorable momentum, nothing in the way. And then once again, since I'm looking for termination conditions here, if I don't have 3 divergences on the 5-1, it is go, go, go. I have every advantage that I'm looking for. The reversal bar prints. I've identified my large triggers up strong in the direction. And guys, look at this. Here's your window of opportunity. I have one line inside of favorable large triggers. I have one potential entry point. Does that make sense, guys? Here's your triggers. Your window is from the highest point of support to the lowest point of support. Is everybody with me on this? So what's my only option as a window of opportunity in this particular trade, guys? Absolutely 10 km. You are 100% correct. What's the trigger look on the 5-1? It's just as strong as the 13.2, isn't it? Tiny window of opportunity. Safia, where does my order go? Where am I getting into this trade? Where am I activating a limit order? I'm going to give you a line. You tell me where to put it. Do I put it down here by the blue line? Do I put it up here so that it doesn't miss me? What do you guys think? Should I put it below the mid band? Because what if it overruns a little bit? Or guys, should I have faith? That's it. It's pretty much ready to happen if the ES, if it pulls back right now. 40.65. Right there, Safia. I love it. And then we're going to see something because remember, this mid band moves, right? The market pulls down towards it, pulls down towards it, pulls down towards it. See how that mid band's come up a little bit? Safia, I can put my order a couple ticks above. I'm going to put it at 65.50, a tick or two above that mid band because honestly, I don't want to miss this trade over a tick when I have every advantage in place. Does that make sense? Market comes down, comes down. See how that mid band's coming up to meet it? Comes down, whoops, and I just totally. I did it again. All right, we're coming down, and now you're filled, right? You're a tick or two above the mid band. The mid band's inside of favorable large triggers. You had odds favorable momentum, and there's absolutely no termination conditions. So where's your initial stop going to go? We'll make this one red because it's our stop color. We'll make it tomato. If it's 12 ticks initially, 63.50 right there, kind of below that window of opportunity, right? The window's right here. 13's lucky. There we go. 13 ticks. So there's your initial stop. You're in the trade. You have the advantage of momentum. You have the advantage of no termination conditions. And now, Safia, you have the advantage of entering the market a tick or two above that area of support where the market is likely to continue. And with the stop down here, we've blown through that continuation point if it comes and gets us, right? Market's coming down, you're in. And we're going to go through this very mechanical approach to what we're doing. John says, put the stop where the market shouldn't go. Don't want it above the 13.2 reversal bar marker when the triggers are nuke strong after a good bottom. Not until you can move it based on the rules. So guys, everybody give me a Y in the room if you're with me. The yellow bar is our entry, 65.50. The red bar is our initial stop. And here's our two targets at $100 and $200, right? So the plan, that simple plan, when you look at the example plan, says that the next stop movement that we have is we have to wait for what, guys? A reversal bar in the direction of the trade. So the market's coming down. We're down a couple ticks, but we're not worried because of the advantages we have. And yes, John, 100 and 200 for new users. That very conservative as you learn to read your indicators. And why do we do it? Guys, look at that stop. Keeping you safe where the market shouldn't go. 12 to 14 ticks initially, right? It was close, but we're okay. Stop stays in place. Targets are in place. Nothing to do just yet. Market continues up. First stop is hit. There's $100 in the bank, guys. You're $100 richer. They can't take that from you. It's already yours. And you can just go break even, right? So now the only thing that's going to happen is we're either going to hit our second target or we're going to get stopped out. This is that brand new user. All you're doing is being mechanical, methodical, making sure that you're not succumbing to emotion. Notice that your small triggers are still outside of the large triggers. You still have odds favorable momentum. And the market continues up. A more experienced user may put their first target at the one-to-ones, the first trouble spot, but we're staying mechanical. $100 in the bank, can't lose a thing, makes it easier to hold for that second target. And there you go, Safia. Congratulations. You just hit your second target. Guys, this is a $300 trade. Give me a Y in the room if you're with me on this one. And then watch this. As you grow with the software, you can begin to manage it a little differently. You can come through and look at things. Notice here we get a divergence. Notice here the small triggers are inside. And I want to say that if you look at the 13.2 with all the indicators present, there was probably an area of resistance right there. Guys, this is your plan in the beginning. Keep it simple on your entries. Go for the best of the best. Have reasons to get in every time. Have a checklist to support those reasons. And then now define your management plan. Mechanically set profit targets. And then every trade that you take is an opportunity for a picture. And then every picture that you take is an opportunity to learn how to hold for larger moves. This one is very mechanical. Jumping in, take profits. Who cares what happens next? I can use this exact same chart to say that with this much momentum, I'm going to hold for that next key area. So you develop a management plan based on the perfect entry, based on initially being mechanical, and then understanding the advantages that that momentum gives you and using Fibonacci for areas where the market is likely to go. Does that make sense, guys? Mechanical at first. Keep the emotion out of it. Keep the opinion out of it. Because all you're doing is developing the ability to read your indicators, and as you learn to read your indicators, what happens? You begin to understand when those larger moves are possible, when they're probable, when they're advantageous. Get those drawing off there, and let's see what's going on in the real world. What's happening right now? Guys, I don't have any areas on my 13.2 right now, but what do we see? We see the smalls returning inside of the large. We see a little bit of divergence. Nothing's breaking through this 5-1 area yet. A slowdown. Trigger lines are working inside. The market's losing steam. Let's see if it's losing steam in an area. Just a reminder, everything that I'm talking about, guys, self-training in Discord, chart reading in Discord, example trades, and then if you have a question, you can always ask. Jim H., where can I find documentation on entering a question in the education room? That was just right now. Jim H., are you with me? Maybe you're in the education room. I hope so. Awesome. So Jim H., are you in the education room as well? You can see what I'm doing over there? No worries. So in the upper right-hand corner, you're going to see a little chat box that says Show Chat. Click on it for me, and it's going to put that chat into the room for you. And then it's going to give you, just like in this one, you have that. So down at the bottom, it should say Message. Just like it says here. Type into that message box and hit Enter. Not on this screen, not in the questions area. No, you don't need to hit the plus. That's only if you're attaching a file. Here, let me pull this over so you can see it. Just go ahead and type right in here, and then you'll be good. And then this plus button is if I want to upload a file. So I'll hit that plus button if I'm giving you guys a copy of a high probability trend trade checklist. You want to give it a try real quick so we can make sure that you're good? Guys, this is exactly what Discord is for. So Jim, no more typing in the Ask Questions area. Bring it over to the education room. Let's get a question from you there. There we go. I see you typing. Perfect. All right, so when you're putting in a screencast, what you did is you copied and showed me a picture of it, Jim. Are you using Capture or are you using Snagit? Perfect. So let me get on board with you and let me show you exactly how to share that picture. That was perfect timing, Jim. Thank you. I'm going to click that big capture button, take my picture, get it into my image preview, right? I'm going to click upload, and it looks like you did that. All you have to do from here, Jim, whoops, is click copy. And once I click copy, don't do anything else yet. It's going to put that media on the clipboard. So then if I come to class and I right click and paste, or if you're in the pop out section, Control V, we'll put that screencast link right in there. If I click enter, now it's a link that can be followed. There you go, Jim, picture perfect. No worries. You think full bar away is confusing? The only definition I think of for a Renko bar is trend bar with tail, reversal bar. I think full bar should be replaced with reversal bar. No worries. Jim, let me show you why we say full bar. If this is the look, let me make it nice and big, and I'll show you exactly what I mean. Let's get rid of that. And Jim, this will clear it up for you, I think, because I think you're absolutely right. Full bar becomes difficult to determine, doesn't it? On your 13-2 chart, Jim, when the market reaches this resistance, there's a reversal bar marker right about here. Are you comfortable with the reversal bar marker? All it is it's the area on the chart where this bar has the potential to become a reversal bar. So pretty straightforward on this one. If your large triggers, when this area is reached, remain below the reversal bar marker, it means that there is room for a full bar to print. Well, it's not a reversal bar yet though, right? Right now we're only gauging the space. Is there enough room for this to become a reversal bar? Does that make sense? We're not worried about whether it is or isn't just yet. Well, is there room for a reversal bar to print? Because watch this, if these large triggers are well above the reversal bar marker, then a full reversal bar would get us to the wrong side. There's not room for that entire bar to print unless the trigger lines are below the reversal bar marker. So we'll use that as a gauge to determine if there's room for that reversal bar to print, not necessarily whether or not it has printed. And when there is room for it to print, just like that, see how the reversal bar had room to become a reversal bar and the large triggers are still further away? No worries. That makes total sense. And Jim, this is the one that it takes people a time or two. Did that clear it up for you a little bit? And I think this picture helps. Notice how there was room for the bar to form and we still haven't reached the large triggers. Awesome. And that's where dollars to donuts, this is what we're going to see. That is an amazing question. I appreciate you putting that in there because I really do think that that's something that confuses people in the beginning. And I appreciate that you would ask that and give me an opportunity to clarify a little bit. And now everything is just saying up, right? All right, Earl. All right, Earl, let's take a look. I see what you're doing and I see why you're doing it. But I want to do something here, if I can. Let me take a picture, and I'm going to blow this one up a little bit because what you're doing is you're giving us an amazing, an amazing reason to follow rule number 3. So let me get a picture that I can blow up a little bit here. I'm going to make this nice and big. I'm going to snap that picture. All right, Earl, are you with me? You had odds favorable momentum. You had everything on the 13-2, and I really like the look that you were looking at. So what we've got here, let's fix this, is you're jumping in right at the top of the move, right? You're kind of getting in there, and this looks very much like a, oh no, it's not coming for me move. Rule number 3 says, let's buy an area of support inside of favorable large triggers. So rule number 3, Earl, is going to give you the opportunity. With these conditions met on the 13-2, everything says up, right? Everything's going strong. Everything's moving in the right direction. We just need that little patience piece. And once again, those 1-to-1s are just enough to give me that bounce. And your high probability, low risk entry comes right here at support. And once that trade begins to move, you're virtually riskless, like almost no risk at all. And by the time you get to your original entry, you've already got money in the bank. You're already at break even. And it gives you an opportunity to make a little bit more money. Where'd that picture go? Right? To not have to sit through the heat. You're in at 36.24, almost 4 points better, which means that your $300 is already reached before you ever get this first divergence. And then you can look for another opportunity. You made 3. Yeah, so rule number 3, guys. And this is a great one to practice. And Earl, I hope you were with us That's what we just did on that bar by bar, coming in and recognizing, man, reduce that risk. Give yourself some room to run. It's a beautiful read. You absolutely nailed it. And that's a great hold based on what everything is saying. But let's get you those extra 4 points, right? Those extra 4.5 points on 2. That's what? That's $400 extra in the bank. Or if you hold it up to here, that's 8 per target. That's 16 ticks instead of 7. That's a big difference on the day when you hit that 2 or 3 times. Great picture. Thank you for that. Guys, the S&P is on a slow grind up. What are our friends in crude oil doing? 50-50 trade. No divergence, and it pushes right back down with the momentum. Divergence prints, and the party's over. Guys, if you're working on that conservative plan, 50-50 trade. This is an area with a potential to break, but it hasn't broken yet. Does everyone understand that concept? Give me a Y in the room if you're with me. This area has the potential to break with that odds favorable momentum, but it has not broken yet because both the small and the large didn't make it to the other side. On the 5-1, with an absolute picture perfect tiny window of opportunity, no divergence, strong triggers entry, absolutely amazing. Take that trade, manage it assertively. When that divergence prints, it's party over. For the conservative user, this is your best of the best. As you grow with the software, you may take a chance on a different one, but in the very beginning, if you're using that example plan as your base, you're not looking for that entry when divergence prints. This is a great picture too, guys. No divergence. Pivot comes from the middle of nowhere. That 50-50 coming into the mid-band, coming into resistance, if it's not perfect, the odds of it finishing the move are slim to none. And often the market turns and reverses and heads the other direction. And there's your next trend trade. And that's exactly what it did, isn't it? Everything turned, went back up, but now we've got a 50-50 on the top. And that 50-50 doesn't work either. We are identifying some consolidation coming through. There's a lot of room in that consolidation, but they're struggling to get a clear path one way or the other. Because it is 11:53 on a Friday, guys. Most of the professional traders are heading to lunch. Martini glass is shaken. Steak on the table, getting ready for a holiday weekend. Oh, it's not a holiday, but getting ready for a weekend. I don't know, is there football on this weekend? People getting ready for football games? I'm the worst. I've watched like 2 games. Do we know who's in the Super Bowl yet? This is the best Sunday of the year. Who's playing this weekend, John? We're in the last 4 minutes and there's no trade setups. 2 good ones to find Super Bowl teams. All right. Who is it? The Houston Texans are probably in there, right? I haven't watched a lot of football, but they're amazing every year. I just assume they're one of the 4. I kid. Guys, you want to talk about getting used to losers? Be a Texans fan with me. Losses do not faze you, not in the least amount. All right. I'm going to call it right now. Are you ready? It's going to be the 49ers and the Chiefs this year. There's your Super Bowl, guys. 49ers and the Chiefs. I don't know who Mattress Mac's going to bet on without a Texas team in there. You know, whenever Texas teams do this, you're betting Eagles, Bengals. All right. Guys, you see the sibling rivalry here? John, I got you for a cold beer. Mattress Mac is a furniture store owner in Houston. He used to be a University of Texas football player. And anytime in Houston when the Astros are going, You got the cheerleaders by 2? I like it. If you go in and you buy furniture at his place and the Astros win the World Series, you get it for free. One year he took like a $9 million bath. But he'll go out and he'll bet on games, and he'll bet millions and millions on these games. He's an old man at the tail end with more money than he'll ever be able to spend. And he's having a good time with it, and I love that. Mahomes is the oldest quarterback in the playoffs. And he's what, 24? He's a youngin'. So young. Guys, I always like ending Fridays with a little bit of chitter chatter. It's kind of fun. We spend a lot of time being serious, looking at rules, following rules, building checklists. Remember to take a mental break every now and then, right? Remember to take a mental break. Do something that makes you happy. Take a walk, hang out with somebody, go swing some golf clubs. I will be, where will I be? I will be in my final spot Monday when I come. We'll be at the house. Our road trip across the Southwest and up the California coast ends tomorrow. Thank goodness. Excited to get in. Guys, it's going to be a great weekend. Next week's going to be an amazing week. Do some market replay, rebuild your charts and templates. I will see you Monday morning, 9 a.m. Eastern, and we're going to keep doing this, guys. Is there a video on momentum trades? John Novak, have you made a video on momentum trades? You're very welcome, India. I'm not sure that John's made a video, to be honest with you. He may have. I think, honestly, if you go to the Nexgen site and you go to the live videos, there is a John Novak takes the room. I was in the middle of a move, I think. Let me see if I can find it. It'll say John Novak live seminar. And I want to say that that's where he starts talking about those momentum trades. There we go. Oh, there you go. He gave you the video before I could. I knew there probably was one. Yeah, definitely, Ron. Definitely. I'm excited to settle down. Professionally homeless is an amazing way to be, but it is exhausting after a month. So I'll see you guys Monday morning. We're going to do it again. Have some fun. Enjoy. Watch some football. Remember that it's going to be the 49ers and the Chiefs. And then when John is wrong about the Eagles and the Bengals, go ahead and make fun of him a little bit for me because I'm scared of him. He's my big brother. Take care, everybody. I really enjoy this class, and I appreciate the input. You guys be good. I'll see you on Monday. Hey, beautiful. Listen to a book.